Hello, welcome again to another episode of our podcast on real estate investing. My name is Seewing from the Year Real Estate Network. As I'm going to go through this hypothetical scenario, I'm going to ask you, the YouTube audience out there, to comment on the content of this video. Comment at the bottom. What do you think at the end of this video? And I will most certainly will respond to your comments, and we can do some some back and forth communication. Yes or no, what do you think? All right, so right now you have no clue what I'm talking about, but we will see. Let me share my screen. So let's get started. Here we go. The question is, should you buy a rental property today with 7.3% mortgage interest rate, 30-year fixed rate mortgage? Right, so let me give you some example. And you know why 7.3, right? Today, we're talking in the third week of September. Today is 22nd September as I recorded this video. And the Federal Reserve have raised the interest rate to approximately 6.3%, something like that. Now, bear in mind, this rate is for primary homeowners. This is an owner-occupied rate. For real estate investor that want to buy investment property, your mortgage rate is higher because the risk of a loan is higher for investors. That's how it is. That's history. So 7.3% could be the interest rate on a 30-year fixed rate mortgage when you when you finance an investment property, anywhere from 20 to 25% down payment. Now, I know these numbers could be quite small, but I will do my best to verbally go over that. So I'm just giving you a sample property. It does not really matter where it is, but I'm just want some audience feedback, giving what's going on, giving the interest rate, giving the real estate market, and so forth. Now, once again, most information are associated with a primary home buyer. I get it. There's a lot of videos. There's a lot of talk or the mass media, the CNBC of this world, the CNN of the world, and all the news media. They talk about primary homeowners and the challenges that they are facing in this very, very challenging real estate market. But nobody ever talk about the real estate investors, how they look at things. All right. So these videos can be very, very short. There's a lot more to it. I don't want to spend too much time, and you will see it on my other videos. But okay, just bear with me. Okay, what I have to say. So this property is located. I'm not going to say where it's going to be located. You kind of see it. All right. This property the sales price for this property is a new construction, $210,000. 3-bedroom, 2-bath, cookie cutter house. So typically, you put as an investor, you put 25% down payment, and as you can see at the bottom, the interest rate is 7.3%. I know it's very, very high. So I'm asking you once again, please comment at the bottom after you view this video, and I would love for you to share your comments, good or bad or indifferent. I will respect it, and I will answer it. Okay, so hopefully I can refute your opinion or whatever. We can have a nice, healthy discussion of what I think, what you're thinking. So just so you know, I've been a real estate investor for 3 decades, and I've been helping real estate investors over many, many years to buy cash flow, turnkey, positive cash flow properties for long-term buy and hold strategies. All right, so with that in mind, $210,000 property, never mind that is appraised at $282,000 is a fact. I'm not going to go into detail. So the down payment at 25% down payment, $52,500, and 7.3%. And the projected rent of this property is $1,750. So if you look at the metrics, is is pretty good, rent to value ratio, a little bit less than 1%, which is the benchmark capitalization rate. Some of you may not understand what does that mean. 7.5% cap rate. 5% cap rate is the benchmark for the lowest cap rate that someone can achieve cash flow, if you will, cash and cash return. It meets the benchmark, and so forth and so on. So 1750 monthly gross rent, then you minus your taxes, you say the bottom, insurance, property management fee, and your mortgage, monthly mortgage at 7.3%, 1319, and then actually, I'm sorry, the mortgage payment is 1,080. So at the end of the day, if you collect this amount of rent 1750 minus all your monthly mortgage and your debt service, you will come up with, at the end of the month, with a positive monthly cash flow of $239. So from a high level, please comment whether this is a good purchase, given today's environment. You want to wait longer until the market come down. If they come down, it all depends on what market, right? So as an investor, should you wait to buy? Wait until the housing prices come down, or wait until the interest rate will come down so you can get better return on investment? Or should you buy now, giving this higher rate and whatever? But before I will give you some additional variables, let's go on to the second property. Another property is listed at 310,000. The market value is 355K. So you can pretty much know is you're being given a discount. Okay, that's all I need to say for right now. Same thing, $310,000 property, 3-bedroom, 2-bath, in one of the fastest growing area in the country, just so you know, and 1,350 square foot, and you're also getting an investor mortgage rate 7.3%. It is what it is in today's market. So 25% down payment, your total out of pocket is 81,500, and you're able to the projected rent is 2,200, and then you minus your vacancy factors, your property taxes, insurance, property management fee, and your mortgage payment of 1,594. And at the end of the day, you collect rent of 2,200. You have a monthly net cash flow of $22. Now, before you rush to judgment, okay, I know we're not getting the best cash flow, but cash flow is just one component of a property. So there are 5 dimensions of a property, and I will show you what I mean by that. Oops. Okay, all right. Okay, income property, just so you know, a lot of you don't know whether you are a real estate investor or not. Income property is history's most powerful and proven multi-dimensional real estate asset class. Is one of the best tax favored investment asset class in the world. Okay, and income property are not only getting the cash flow, the component, the multi-dimensional means you're getting, as you can see, you're getting the rental income, the cash flow, you're getting the depreciation tax benefit, you're getting the long-term equity growth at 4 to 6% appreciation rate on a historical basis, and you get also the able to get leverage, you're able to finance a property. You're not paying 100% of the asset, you're paying only 20 to 25% of the asset. And using the OPM analogy, other people's money, the lender gonna finance 75% or 80% of your asset through the power of leveraging. So again, see, so you are making money 5 different ways. If the cash flow is very, very low, so what's your expectation? Okay, this is the reality of today's market. Should you sit in a sideline and wait to buy real estate, or you buy real estate or wait? If you buy now, given the high interest rate loan, you get a little bit of cash flow. But here's the future potential. You and I know that, in fact, let me go back to mine. You and I know that there are more renters right now than ever in history, ever, right? And because most people cannot afford to buy homes these days because of the high interest rate, they are entering the rental pool. So the rental increases are very dramatic, depending on a particular market. Some rental rates have increased 20, 30 to 40% in certain market. For example, in Austin, Central Texas, is such the case, and various areas of Florida. The landlord is increasing the rental rates 20, 30, 40, 50%, which is mind-boggling. Now there are more renters than ever before in history of America. It is becoming a renter's nation. So, so you buy this asset currently to take advantage of the potential appreciation. Yes, now is single-digit appreciation. I get it, but hey, right now it's still very low supply of inventory, and the demand is pretty high still. So low supply, high demand, right? You do the economics 101. What does that mean? So the 5 dimensions of wealth building benefit, a little bit of cash flow, but the cash flow will be higher because you're able to raise your rent later, giving the skyrocketing of rents that are occurring in many parts of the country. So soon, inflation is very, very high. So this means the rental rates can be very high. So you have the ability to, on a systematic basis, to increase your rental rates. So you can systematically increase your cash flow down the road, and your renter, you put down 25%, that is your only upfront risk. The rest is gravy. What I mean by that, that means the renter can pay every month that $2,200 rent on one of the house, and the other $1,750. That rent will be able to pay your mortgage, even at 7.3%, going to be able to pay your monthly taxes, insurance, property management fee, 5% vacancy, 5% maintenance and upkeep. And then at the end of the day, at the end of the month, you still have some kind of positive cash flow. So over time, you can increase your cash flow due to inflation, due to rental increases. Your equity will increase. Your rental will pay down your 30-year debt. Your debt, your rental will pay for everything, right? Over many more years to come, increasing rent, more cash flow, increasing appreciation on your asset, and then your rental will pay down your debt service systematically. So therefore, your debt service is going to be paid off eventually. So you can have even more cash flow, and then you receive tremendous amount of tax benefit, huge tax benefit that are very few other asset class can give you. So at the end of the day, so you decide, okay? Stay on the sideline, do not buy rental property, or buy property right now for low cash flow, and allow your asset to grow over value, and your 5 dimensions of making the money on your real estate asset will grow over time. Right? So yes or no, comment below. What do you think? Is a good time to buy now as an investor or not? If not, why? Put it down in the video comment. I'll be more than happy to answer them, and then we'll go from there. And if you see a lot of value from this short video, please click the like button and also subscribe to my channel. I have videos produced every single week about various aspects of real estate investing or home ownership, or general information about real estate market and so forth. And of course, one final thing, if you want to join our real estate community, all you gotta do is just submit your email into my website below. Sign up for our newsletter. Every week you will receive free real estate education and free real estate investment opportunities for your view, and so you can get educated and informed, become a very high level, good mom and pop real estate investor to achieve your wealth. Thank you so much for your time. This is Seewing from the Real Estate Network. I will see you on the next video. Have a nice day. Bye-bye.